Pranjul Bhandari, Chief India Economist at HSBC, on the show today. And I think, in a sense, if one had to define the key themes that Pranjul has flagged off ahead of Budget 2016, it is the 3 C's: continuation, countryside revival, and consolidation. I'm going to focus on those 3 C's with Pranjul. Thanks very much for joining us this afternoon. First, what is the broad approach you expect the government to take in Budget 2016? And then we'll get into the real debate about room to spend that the government has. What is the broad approach?
Well, I think, my base case at this point is that they're going to not stick to their pre-announced target of 3.5%. They'll sign up for something wider, I think something to the tune of 3.8% of GDP. Now, we all know, it's very well known that there were a lot of mounting pressures for the government this year. A huge 7th Pay Commission bill, rural distress that it has to take care of, bank recapitalization funds and so on. And we estimated that, all of this was adding up to about 1% of GDP. But, on the other hand, we wrote in a lot of detail over the last couple of months, the government could have actually raised revenues to meet these mounting pressures by undertaking some fiscal reforms. For instance, selling more Suti stakes or, other stake sales that it has stakes in. It could have done much more subsidy rationalization. There's still a lot that needs to be done in terms of food subsidy and fertilizer subsidy rationalization. It could have removed some of the concessions and loopholes in customs duties and excise duties, tightened up corporate taxes. There's a lot that the government could have done and raised money for these mounting pressures, but we think that in this budget it will actually choose to spend more and come up with a wider deficit. Okay.
I mean, that's a very clear, unequivocal statement. You believe that the government is going to choose to spend more. And that's where the debate exists, isn't it? Whether or not it will actually spend more in this budget. Having made that assertion, let's talk about where this spend is likely to be directed, according to you, Pranjul, according to HSBC. You talk about the first C, which is continuation. What is it that you're referring to?
Well, in terms of continuation, it's not just about spending. It's just also about, what you were saying, the overall thrust of the budget this year. Continuation basically means that, look, last year in the budget, the government had some big ideas, capex, more money to states, reforming your banks, so on and so forth. I think this year they will take each of these to the next step, to the next level. For instance, they might increase some of the capex outlays further, have suitable amount of bank recapitalization funds, have some tight deadlines for the setting up of bank bureaus and other governance reforms in public sector banks, and more importantly, talk much more about address the problems it is facing in passing some of the key bills. We think they're going to focus on 3 bills this year, 2016. The first is going to be the GST, the second is the bankruptcy code, and the third is the RBI amendment bill, which formalizes inflation targeting in the country. So there would be some sort of chatter, there would be some sort of milestones, deadlines in each of these 3. This is what we are expecting in terms of continuation of the things that the government has been driving over the last year.
Okay. Now, when you talk about countryside revival, and that obviously has more of the spend angle associated to it, the rural distress, there's no debate about the extent and depth and width of that distress. What specifically are you expecting?
Well, on both fronts, one is infrastructure. When I talk about infrastructure, I mean rural roads and I mean irrigation. So larger outlays in both of these, and I think they are very much needed. Now, remember, even if we get private investment back in the country, generally private investment is not geared towards rural India. So it's great to see the government spending more on rural infrastructure. Second, we also think that the government will be spending more on rural safety nets. And here, the crop insurance scheme that it has been talking about, and also some sort of a voice of support to the NREGA unemployment benefits, that it has. Overall, we think that the spending on rural India would increase by about 0.2% of GDP. It's not a very big number, per se, but if you look at a year-on-year increase, it is quite substantial. So I think some money coming for rural India will be seen in this budget, and it will be a good thing.
Okay. What about the consolidation theme that you've referred to in your writings? What specifically, are you expecting from the budget there?
Yeah, so I think that's probably the most important point in this budget. That's where much of the debate is happening. What's gone wrong or what's gone right with the consolidation path. If this year it misses the 3.5% target, it would have been the second year in a row in which the government would not have stuck to the path. Is there something wrong with the path? Is it possible that the government has outlined a path which is just very difficult to reach? Because even in FY17, if it reaches 3.5, remember FY18 expects it to get to 3%, which is even more punishing. It's 50 bips of consolidation in 1 year. So it will be very important to lay out a much more credible and well thought out fiscal consolidation path over the next couple of years. And also with some more details than we've seen before. How does the government actually, think it's going to consolidate at a time when global recovery could remain fragile over the next couple of years? So it'll be good to see some more thoughtful statements coming out on that front. And now that we're talking about breaching the fiscal deficit target, I really want to make a point. A lot of people think that breaching the fiscal deficit target, instead of doing 3.5, doing 3.8 is growth enhancing. It will support growth on the margin. But here I just wanted to say that, we've looked at it with a lot of detail, with this whole thing called the fiscal impulse model, that in the short run, in very immediate future, it can give some stimulus to growth, higher wages for government employees and so on. But in a medium term, 6 months down the line, it actually can result in crowding out, especially now when bond yields, both government bond yields and corporate bond yields are very elevated. There could be a clear case of crowding out. So in the medium term, the impact on growth is not clear. It does not necessarily have to be growth enhancing. In fact, it could be taking away from growth. So really, it's very uncertain. This whole argument that, you do more spending, you run higher deficit to support growth, may not turn out as a lot of people think it will.
Pranjul, would it be fair to say that you're actually leaning towards the other point of view, which is that fiscal consolidation can actually coexist with macro stability and promote higher growth? I mean, is that the proposition that you're favoring more? I know it's uncertain outlook going forward, given the global scenario as well, but where do you stand on this whole sort of meter?
Well, yes, I do. And that would have been the ideal and the best case scenario if the government undertook some important fiscal reforms. For instance, it did more disinvestment, it plugged loopholes in taxes, it rationalized food and fertilizer subsidies, and the money it generated from there, it used that to finance its higher spending, seventh pay commission, capex, bank recapitalization, and so on and so forth. What we would have had then is that we would stick to 3.5% of GDP. Our public debt ratios, which are already ticking up and have become somewhat an indicator of macro stability, would not tick up any further. And at the same time, our bond yields, in the government bond market, our bond yields would not be facing too much supply of government paper, and they would not remain as elevated. Perhaps it would also come down, and that would help, attract the private sector over the medium term, crowd in the private sector. So that would have got you the best of both worlds, macro stability on the one hand and better growth prospects on the other. But this is only if the government had, decided to undertake all these fiscal reforms. Let's see, the government can surprise us on the 29th of February.
Well, aren't we always hoping that every year, Pranjul? But I just want to stick with a couple of points that you've made and get some more granular view there. You've talked about the spend, and I think there's a very compelling proposition for the spend. So the seventh pay commission, the bank recapitalization, it's a must do. But on the revenue side, divestment, it's a volatile stock market environment. The windows are getting narrower for the government to, proceed with its divestment program and not attract too much criticism, because now even divestment can take large political overtones. Rationalize the subsidies. Again, tricky. These are old ideas that need better execution. Can you see any fresh ideas on the revenue generation side from the government?
Well, these are the old ideas, but, these are, the golden, rock-solid ideas which the economy needs. We do it now, we clean up the space, we get some fiscal savings, and we get ourselves years of very high growth, in the economy. In some sense, we've pluck the low-hanging fruits, and we only have the high-hanging fruits that are available to us. And yes, there is food subsidy, fertilizer subsidy. I hear your point that they are politically contentious issues, but there are middle paths as well. For example, take food subsidy. There are two things you can do. One is link up food subsidy to the UID Aadhaar portal, and the other is to move from product subsidy to cash subsidy. Now, the latter could be a little controversial, and many states would not agree to it over the medium term. You can sort of, defer that to later into, in the next couple of years. But at least now, if you can link up the food beneficiaries to Aadhaar in a more systematic way across all the districts of India, that itself could get you a lot of savings. Remember, there are pilot studies done which show that, just getting linked to the Aadhaar platform can get you about 20% of savings in the fiscal bill by removing ghosts and duplicates. So there's a lot of stuff that can still be done in the short term, and everything is not, so politically contentious. Okay. That's really the big point. On disinvestments, agree that prices will never be favorable. But look, for the last 10 years, every year we miss our disinvestment target because we feel that we could have got better prices. There's no ideal price to be had. There are many ways to sort of cushion yourself from volatility. You could, you could sort of give out sell stakes in drabs, in dribbles and drabs a little bit every quarter. There are a lot of things you can still do. There are a lot of professional advisors who can advise the government on how to do it in a relatively more risk-free way. So there are a lot of ways out to do these fiscal reforms.
I want to talk a little bit more about tax changes. And have you noticed I've not even brought up the word GST, because I think all of us suffer from fatigue when it comes to discussion around the GST. But of course, I want you to address the probability of that making its way. And in anticipation of GST on the tax side, what kind of rationalization are you expecting in this budget so that the alignment becomes better and better?
Well, the most obvious one is the service tax. Now, the service tax rate right now is about 14.5%. When the GST comes and the GST's rate is around, 18 to 20%, then the service tax will have to suddenly see a big jump, from 14.5 to 18-20%. So at this point, it will be a very good preparation step to increase the services tax by about, say 2% to 16.5 or something like that. I think that will be a good, a good platform. In terms of other, reforms on the tax front, in the last budget, the government had announced that it wants to rationalize corporate taxes, basically bring them down in a 5-year horizon, but at the same time, remove a lot of the loopholes and special exemptions that are there in the picture. So, we expect that this year we'll see the first move of that path that the government had outlined last year. So basically something on services tax and something on corporate tax we expect to see this year.
Well, Pranjul, I'm going to leave it at that. Thanks very much for joining us this afternoon. And of course, we're going to have more time together discussing and debating the budget and what it delivers post-Monday. Good having you on NDTV Profit today. Again, thanks very much.